Hello, everybody. What is going on? It is the Naughty Investor here, coming at you with another video. SEC official promises, quote, plain English guidance on ICOs coming soon. Now, this is really good news in my opinion because I understand the argument that we don't want any regulations. I do understand that argument. However, the worst thing that could happen in investing is uncertainty, okay? So uncertainty is worse than draconian regulations. So if the SEC came out and said we're not doing any regulations, fine. If they come out and say we're going to be doing these regulations, fine. But investors do not like uncertainty. They want to know what they're getting into. So plain English guidance on ICOs coming soon, to me, is good news because at least, even if they're too draconian, even if the regulations are not good regulations, it's still better than having uncertainty because uncertainty is one of the worst things that could happen in a market. So let me get into the article and then I will give my thoughts. SEC Director William Hinman promised that the agency will be soon issuing plain English guidance on ICO regulation. Cryptocurrency developers and investors have been eagerly waiting for clear guidance from regulatory agencies for years. At the recent FinTech Week conference in DC, William Hinman, Director of Corporation Finance for the U.S. Security and Exchange Commission, that is SEC, announced the agency will be finally issuing plain English guidance on ICOs. The guidelines from the SEC will reportedly help developers figure out whether or not their project is classified as a security, which will ultimately determine how the token is regulated. At the event, Hinman said, quote, "We also will be putting out more guidance. The idea is a plain English instrument that people can look at and they'll bring together sort of my Howie meets Gary speech. And that analysis will elaborate on that in a very plain English way. So do I think I have a security offering? Look at the guidance and you should be able to sort things out." Hinman said that developers will need to submit their projects through the SEC's new FinHub division, which decide if it will be regulated as a security. Once you determine whether you have a security, we're going to have in that guidance, how do I go about registering? And how do I go about doing an exempt offering? I think we can try to bring that together and share that. We want to share that a little bit more transparently. Under the SEC's guidelines, many of blockchain projects currently on the market could be considered securities. Hinman clarified that if someone's offering an instrument for money or other considerations to a third party, and that third party expects the offering to generate a return or something that will increase the value of the coin or token or whatever they want to call it, and there's an expectation of return, we're generally going to see that as a security. Now, I actually disagree with this because by definition, that is not what a security is. It's just not. I mean, if you go out and you are going tag sailing and you go and buy a antique and you're expecting that antique to go up in value and someone sold you that antique, did that person sell you a security illegally? No. To me, whether or not you're expecting the value of it to go up is completely irrelevant. What makes something a security is, does it give you a stake in a company? Does it give you a piece of a company? So I completely disagree with him here because that's just ridiculous. Okay, first off, that's completely subjective. Some people might be expecting a return, some might not, but it's no way to prove either one. I mean, most people are investing to expect a return. Yes, obviously, but what's the way to prove that? There is none. It's completely reliant on whoever is reviewing its opinion. So I don't agree with this at all. But whatever, it's still better than having complete, chaos in the industry. It's better than having, uncertainty, like I said previously. But let me go a little bit further. Industry waiting for clarity. As Crypto Globe reported in September, more than a dozen members of Congress sent a letter to the chairman of the SEC, Jay Clayton, asking the agency to present a clear picture of how it views cryptocurrencies and other digital assets. For years, lack of clarity from regulatory agencies has left many developers and traders nervous about the future of their favorite project. lack of regulatory clarity is also one of the primary factors that is keeping institutional investors from bringing their money into the space, and as they wait on the sidelines to see how this new asset class unfolds. This has been such a prevailing theme that many crypto investors have predicted a massive bull run once the regulatory framework is in place, as the traditional financial institutions will feel more comfortable entering the market. So again, I'm just going to reiterate, I think this is overall positive because, again, some regulation is better than uncertainty. Whichever side you're on, if you're for regulation, if you're against it, the worst thing you want to have is uncertainty, because uncertainty will stop people from investing. Now, again, I don't agree with the SEC completely, but it is what it is. We'll see where this goes. Hopefully they make the right decisions and don't be too draconian. Next up, Binance dominates crypto platform rankings as Korean exchanges spike in trading volume. Binance dominates cryptocurrency platform rankings as exchanges in Korea surge. Cryptocurrency exchanges are becoming critical elements to the entire crypto ecosystem, as they are the initial point of entry for a majority of the users and investors in digital assets. As such, cryptocurrency exchanges are big business, and the boom of Bitcoin has made them fiercely competitive. The Blockchain Transparency Institute recently took to rank the cryptocurrency platforms, and surprisingly, Binance turned out to be the top with a trading volume of 1 billion within 24 hours. In comparison, OKX, once ranked first, came in second with daily trading volume of 700 million from a mere 30,000 users. The report further indicated that Binance also surpassed OKX regarding active users, web visits, mobile volume, and its API volume. Binance leads 160,000 web users and 152,000 mobile users. The findings by Blockchain Transparency Institute team also took to task the new method employed by upcoming exchanges looking to ride on the popularity of ICOs. The past 2 years saw a rise in exchanges with listing fees and surprisingly high volumes of little-known tokens, given rise to controversial debates. This is the whole idea of exchanges being corrupt and pump and dumping and artificially inflating volume and prices, as well as charging insane fees to get listed. But this is a problem that will correct itself as decentralized exchanges become more popular. According to the research team, the new malpractices by upcoming exchanges involve targeting low market cap cryptos with irresistible offers to build up their volume and trade activity. In return, the coin would get increased hype and luckily get listed on crypto data platforms such as CoinMarketCap. The team explains the logic of the malpractice by saying, quote, "We found that many of these exchanges were preying on low market cap coins, which are desperate for the recognition and volume of a top 10 or 25 exchange. In most of the crypto projects we spoke with, this also involves supplying the exchange with a large number of tokens, which are then used to inflate volume numbers on CoinMarketCap massively, eventually luring in prospective traders from other exchanges with much lower but real volume." However, the Blockchain Transparency Institute also found a mechanism put in place by leading exchanges like Binance and GoPax to legitimize the crypto market. The exchange is leveraging their volume by requesting high listing fees of between 5 Bitcoin to 60 Bitcoin to counter the efforts of malpractices. So Binance rises, and this article gives a little bit of feedback from that institute on exchange malpractices. Now, I think Binance and KuCoin are some of the better exchanges if you're looking for a variety. In terms of going for simplicity, I still think Coinbase is good for your average newer investor, as well as CEX. And if you did want to use those platforms, there are links down below, which I think will save you a little bit in fees. CEX is generally my preference over Coinbase because it's still simple, yet has a little bit more of an offering than Coinbase, but use either when you want. And now on to the markets today. Nice uptick in the markets today. Ethereum up 5%, XRP up 8%, Bitcoin Cash up 13%, Bitcoin finding stability with a 1% gain, stability over $6,500 US. Current market cap is at 220 billion US dollars. Bitcoin dominance at 51.2%. Biggest gainer is Bitcoin Cash today. Biggest loser is Redcoin, only down 3%. So not a ton of losses today. Overall, a big market pump today. Awesome, awesome, awesome. And Bitcoin dominance again is at 51.2%. I'm the Naughty Investor. If you enjoyed this video, leave a like, subscribe, share it. Thank you so much for the awesome support I've been getting on the channel. And if you want to get $25 worth of free Bitcoin, check out the link in the description, and I'll catch you next time. Have a great day.